Hey folks, Siam here. Haven't done a public sort of charting update for a while, so here goes. I figured we would talk about Bitcoin price action, some lick levels, and some hedged shorts, maybe? Possibly. Who knows? Righty-tighty, let's have a look at Bitcoin. So, if we look at this on the daily chart, and if we get rid of all my little doodles so we can see what's going on here. So we've seen Bitcoin hover around that 28k level for the best part of a month, and we've suddenly got a bit of a breakthrough. As I've said, if we look in the Telegram in the RT group, oh no, I was up there, sorry. We've been looking at these lick levels for a while now, and what I said, this one, so on, what was it, 3rd of April, I was basically saying that this chart shows us the highest probability levels next, around 29 to 30k, then 25, 26, then 22, 23. Time frame, not clear. So what I was saying is that there's a lot of liquidity around here because that's where most levered or derivative traders have put their liquidation points. And it's probably in fact, when you add all of that up, that's quite a lot, from just about all that light area, there's the best part of $100 billion there if you were to add it up. And then the next big areas around here, and then huge amounts of liquidity down here just above 22. So I was saying that 1 up here, up maybe north of 30, and then 2, then 3 potentially. So what's actually happened? We finally moved up into that 29 to 30 level, and I wouldn't get too high hopes just yet, because if we look at this 30k level, this is one huge level of resistance. Huge. We can see that this has been a massive support level in the past, and the market has looked at this level quite a lot. So it's not just that. Remember, support and resistance isn't thin, precise lines. It's more of like a big range, so to speak. So if we, oh dear lordy, here we go. So as you can see, that sort of little range there between sort of 28, well 29, 30, that as well has been support and also resistance here, and we've now just breached into that 30. Now for a long time I've said to my students that my invalidation levels, where I actually start pivoting and being a little bit bullish, is above that 32k level. As we can see here, there's a fair bit of noise around sort of 32k back, created late or mid last year, and so where I invalidate my own thesis or my stance, so to speak, is that we need to stay above 30k for a fair while, and we need to effectively stick the landing. So it needs to stay above 30k for a couple of weeks. So a lot of people say, oh, the weekly bar just needs to close above it. Nah, bullshit. That's a very retail way of thinking. Really, for it to mean anything, it needs to stay above 30 for at least let's say 2 to 3 weeks, and then only then, let's say it stutters for a bit, and only then once it starts passing sort of 32.50, it's around here, that's where I'll start to get bullish. Very, very similar to this sort of price action. We need basically Bitcoin to get really boring above 30, as in boring above 30. It's this sort of price action above 30, and then to start moving up. That's when I start getting bullish. And like, I made a little meme here the other day. I'm not very good at memes, but best I could do, this. Come on, do something. That sort of price action needs to happen above 30, basically. So if we get rid of my doodles again, the other thing that we need to pay attention to are resistance levels, a little something like this, and also if we put that 30k level back in. So what we're bumping into now is a confluence of resistance. So I'm more inclined to go short here, knowing that, looking at the lick levels, we're sort of, oopsie, basically around 31. So maybe putting in, so yeah, I think the trade that I'm potentially eyeing up in terms of a hedge short, I'll talk about that in a sec, but the position I'd like to do is something along the lines of, so first entry to go short, something like that, and then we'd have, one second, in terms of a take profit, I'd like it, not that I'd like, I'm just looking at the levels here. There is a clear level between here and also there. So I think a short-term target could be something like, as in to be a safe one like that, but to scale in. So you take a bunch of risk and then you chop it up into a couple of entries. So I'd say something like a triple entry method, triple entry execution. 34. Actually, you could probably, where are these levels? Yeah, 32.3. I'm happy with that. Actually, a quadruple entry, probably a better way to go about it. With a, these two low balls, you sort of hope that you get in. So something like that. So I know the first one at 31k doesn't seem that good. I mean, that is 1.2R, 26R, but then it does get better. But if you look at the whole position, so let's say, I don't know. Let's just say you're happy to do this sort of positional short, let's say, and use 5% of your total pot to short this. All you would do is you would get your calculator out and you go 5% divided by 4, because you're going to enter in 4 tranches, so 1.25. So what would effectively happen is that each one of these trades would be 1.25% max risk. Oh god, you can't really draw on TradingView, so insensitive. But yeah, so each one of these would be 1.25. So the whole position, you could say, right, I'm willing to risk 5% of the total pot, etc. Now, in terms of the hedged short, now I wouldn't do this for 99% of people listening right now, don't do this. But for those that are familiar with trading and get where I'm going with this, is that you could effectively hedge away this by going to the spot market and buying an amount of Bitcoin. You'd have to do the maths, but buying an amount of Bitcoin at each level. So at each time you're getting in, you buy a spot Bitcoin. So if your shorts bomb out, let's say, and they are, in fact, let's do it this way. So the amount of Bitcoin you buy, whatever that combined amount is at this point, needs to basically completely offset your hedge. So let's just take random numbers. Let's say of your 5% max risk, let's say you're going to risk, let's do it in dollars, most people work in dollars. Let's say you're going to risk $5,000 on this whole position, or on these trade, or on this short over here. What you'd need to do is also buy spot Bitcoin on Binance or wherever, and have it so that if you get absolutely bombed out at this stop loss up here, then your spot is made plus 5,000. So what this means is that you're net negative or net neutral at this point here if your short thesis was wrong, and then you can sell your spot, and so you haven't actually lost any money. But if your trades are correct, but I wouldn't take a limit, by the way, for your spot. But let's say your trades are correct. Let's say the market does something like this, pings in, let's say 3 of these, and then does what I think, and you have a nice, R multiple here. I mean, remember, because don't treat these as 4 individual trades. This is one position that you're scaling in. So if you activate 3 of them, and what is this? 3.81 to, yes, let's say on average you end up making 2R as a whole. You can obviously take profit there. So if you're making 2R on whole, the $5 that you risk, I can't make up words now. That's now 10 grand, 10k, and obviously your spot is slightly underwater. So you can either choose to sell your spot for a bit of a loss, and then whatever the difference between your profit and your whatever your lost, that will be your net profit. Or you can just sit tight and just keep your spot, knowing that it's spot, you lock it away in your Trezor or whatever, and it's just a hedge really. So there's so many facets, so many things that you can do with this. But again, for most people, I would just not do it. Only do this if you are a trader of some sort and sort of know what you're doing. But yeah, I'd like to get short. And don't forget, we have all sorts of things coming up. We've got the Ether unlocking, we're Capella. So we've got the Capella update, the Shanghai update. So a lot of ETH will be unstaked. Now, I actually think it's going to be a bit of a non-event, to be honest, because it's such a small percentage of ETH that is coming out online. I mean, only 15% of all of ETH is locked up. So if anything, I think I've put this in other videos that I think, pessimistic or conservatively speaking, only about I reckon $500 million worth of ETH is probably going to be sold, and most of that is going to be staking rewards anyway. And when you look at that in terms of ETH ADV, so average daily volume, it's going to be about 5% of ADV. So I think it's going to be a bit of a non-event, to be honest. But yeah, it's just my 2 cents. I'd like to get short with this particular move, and you can always hedge it. But yeah, I would not forget the ongoing calamity that's happening with the US economy, or the global economy, full stop. And remember, rising stock market and housing prices do not indicate economic health. If you just go to Macrometrics Siam Kid and just go to Macrometrics 1, rising stocks do not blah blah blah. This is a very important
21
video
million.
to watch. And also, yeah, just check out the last couple of videos that I've put out where I talk about some of the macro stuff. So big global
Hey YouTube
videos. Yeah, these two, part 1 and part 2, covers quite a lot. And yeah, hope this makes sense, and I'll see you soon. Toodles, bye.